If the stock market sounds confusing, you're not alone. Many people hear words like shares, index funds, or market crashes and immediately feel like investing is only for experts or rich people. But the truth is, the stock market is actually a very simple idea. It's just a way for everyday people to own small pieces of real companies. In this video, I'll explain what the stock market is, how it works, and how you can start investing step by step, even if you're watching this for the first time. Before we begin, this video is for educational purposes only and is not financial advice. Now, let's get started. Let's start with the basics. The stock market is like a marketplace. Just like you go to a market to buy food or clothes, the stock market is where people buy and sell ownership in companies. Companies need money to grow. They may want to open new locations, build new products, hire more employees, or expand into new markets. To raise that money, companies sell small pieces of ownership to the public. These small pieces are called stocks or shares. When you buy a stock, you are not gambling or guessing. You are buying a tiny part of that business. If the company grows and becomes more valuable over time, the piece you own also becomes more valuable. If the company struggles, the value of your share can go down. That's the basic idea behind the stock market. Now let's talk about how people actually make money in the stock market. There are two main ways. The first way is through price growth. For example, if you buy a stock for $50 and later that stock is worth $80, you've made $30 if you sell it. The second way is through dividends. Some companies share part of their profits with their owners. When you own shares of these companies, you may receive small payments regularly just for holding the stock. It's very important to understand one thing here. In the short term, the stock market goes up and down. Prices move every day, sometimes for reasons that don't even make sense. This is normal. The stock market is not a straight line upward like a savings account. It's more like a bumpy road. But historically, over long periods of time, the overall market has tended to grow. Now let's talk about the easiest way for beginners to invest, because this is where many people get confused. When you start investing, you basically have two options. One option is buying individual stocks, which means picking specific companies one by one. This can be risky if you don't know what you're doing, because if one company performs poorly, your investment can suffer. The second option, and the one most beginners should focus on, is index funds. An index fund is very simple. Instead of buying one company, you buy a basket that contains many companies at once. This means you're not relying on just one company to succeed. If some companies do poorly, others may do well, and over time, the basket tends to grow with the overall economy. This is why index funds are so popular for long-term investing. Now let's go through the step-by-step process of how to start investing, keeping everything as simple as possible. Step 1 is to build a small safety buffer. Before you invest, it's a good idea to have some money set aside for emergencies, like unexpected bills or repairs. This helps make sure you don't have to sell your investments at a bad time. Step 2 is to open an investment account. You can do this through a bank or an online brokerage. This account allows you to buy and sell stocks or index funds. Depending on where you live, there may be special investment accounts that offer tax benefits, but the main idea is the same. It's an account designed for investing. Step 3 is to add money regularly. This is one of the most important parts of investing. You don't need a lot of money to start. Even small amounts, like $25 a week or $100 a month, can make a big difference over time. The key is consistency. Investing regularly matters much more than investing a large amount once. Step 4 is to choose a simple, broad index fund. You don't need to overthink this. A fund that holds many companies gives you diversification and reduces risk. You don't need to constantly buy and sell or try to time the market. Step 5 is to stay invested and ignore the noise. This is often the hardest part for beginners. The news will always talk about market crashes, interest rates, or economic problems. Long-term investors succeed by staying calm, continuing to invest, and giving their money time to grow. A good rule to follow is to invest money you won't need for several years. So to summarize, the stock market is simply a way to own small pieces of real companies. You don't need to be rich or an expert to get started. Start small, invest regularly, stay patient, and let time do the work for you.